Over the past 75 years, the Indian startup ecosystem has really set some new benchmarks on the innovation which technology can bring in for the society. India has really pioneered some major innovations in the fields of fintech, SaaS, and other areas. And we've also seen the government take active role in shaping the Indian startup ecosystem. So in this Independence Day special episode, we'll be taking a deep dive into these initiatives and also look at some of the major developments from the ecosystem from the past week. So yes, welcome back to the Startup Operators Weekly Roundup. The Weekly Roundup is a show for people who like to stay updated with the major headlines of the Indian startup ecosystem. If this is the first time you're listening to this episode, please do consider subscribing to our channel and sharing it among your friends who you think would really enjoy the content. So yeah, over the weekend, Roshan, it was really tragic to hear the news of Mr. Rakesh Jhunjhunwala's demise. He has, pioneered some really innovative strategies for investing in the Indian markets, and I'm pretty sure that he has set some new ways of thinking and what the upcoming generations can expect.
Yeah, for sure. In fact, last week, Anshu Jain, who was the former head of Deutsche Bank, also passed away, and he passed away pretty young as well, only at the age of 59. One of the pioneers, one of the first few Indians on Wall Street, paved the way for plenty of others, also was recognized for his tiger conservation efforts and so on. Pretty sad. And, I've been a Rakesh Jhunjhunwala fan for a while. I love his style of speaking, right? He can talk common sense when all of your media anchors are talking about alpha and beta and technicals and whatnot, right? But it's just a very, very tragic incident, he was only 62 years. The great thing about Rakesh was that he was an India optimist, and it's hard to be an optimist because it doesn't look intellectually appealing, right? That Morgan Housel quote, right? Pessimism is intellectually seductive in a way that only optimism wishes it could be, right? That's the case. To talk about doomsday, if you talk about like the 50 things that are wrong with the country or a sector or whatever, you appear to be intellectual, but here was Rakesh Jhunjhunwala saying that, hey, India is a buffet, right?
He was always very optimistic.
He was a huge India optimist, right? And man started off as a short seller in the late 80s. Right, then in the 90s he pivoted to being a proper investor, like what we came to know of him, right? And he was both an investor and a trader. And some of his very big bets that I can think of, Titan, of course, and then Tata Motors, and even of late Delta as well, right? Delta Corp. Yeah, he was just a fantastic person. One of my favorite things was to look at his media interviews, right? He would be absolutely scandalous, right? We talk about FPO money. That person, that kind of effervescent personality, right? He just didn't give a shit, really. He would say whatever is on his mind, and he was a very big believer in India. And also the timing was tragic as well, Akasha Air, which is his initiative, right? They just had their maiden flight, I think a week or 10 days back. And, RJ had turned from an investor to an entrepreneur with that. Also, look at the bet again, right? Airlines is again one of the most capex intensive industries, and taking a bet on that when we are post-COVID, again, showed the amount of optimism and hope that he had for the country, right? Surely he will be missed. Condolences to his family and friends and well-wishers and so on. So, yeah.
Yeah. Also, it's India's 76th Independence Day, right? And Prime Minister Modi says that, the Indian startup ecosystem is actually the backbone of the country. In one of his earlier speeches for National Startup Day on January 16th, he had made this comment, and it's very true. Indian startups has led to the creation of almost 7.5 lakh jobs, and this has been growing steadily. I think in the past 6 years, it has grown 110% year on year. And what is also very interesting to note here is almost half of all the startups in the country come from tier 2 and tier 3 areas of the. We saw in Shark Tank all the various types of innovation that's happening across the country, right? From having wheelbarrows to designs to spray pesticides more innovatively.
Yeah. No, it reflects the aspirations of a new India, which is not diffident, right? Which is more confident, and they're not waiting for bank jobs or whatever else. They want to be entrepreneurs, they want to be creators, they want to be their own bosses, right? And it's a very tangible change. If you have people visiting from abroad, they can kind of sense it. Right, it's in the air. 76th Independence Day is a fantastic milestone. If you look back at some of the things that were said when India became independent, nobody really gave us a chance, right? India was the ultimate startup, right? In that sense. I can remember one of Churchill's quotes saying India will go to thieves and whatnot, right? And we've done fairly well, we often compare ourselves with Korea and Japan and the others and sort of naively say that, hey, we are lagging behind in so many different ways. But you have to think about where we started, right? The baseline where we started, and perhaps the complexity of India itself, right? So many different languages, so many different cultures. It's just very, very large, right? Large and complex. All said and done, we haven't collapsed as some people expected or hoped, rather, right? And we've had a peaceful transfer of governments for all of our years of existence, right? Quite unlike some of our neighbors, and we're thriving, right? And I've often said 2020s will be India's decade, right? And in fact, Rakesh Jhunjhunwala had said that I hope that I'm able to see it, or maybe not in my lifetime, but India will overtake China, right? I do believe that that is an inevitability at some point of time, the way we are growing. So I also liked the Har Ghar Tiranga campaign that the Prime Minister launched. Amazing to see the tricolor everywhere you step out on the roads, at apartments and so on, right? Everyone flying the tricolor, because see, a nation is a man-made construct, right? I mean, a nation, it has to be reinforced through these various tenets, whether it's the flag or the anthem, celebrating your heroes and so on, right? So I love that. I mean, I really love that. And it's a very non-partisan thing as well, right? I mean, you don't have to be a supporter of the BJP or Prime Minister Modi to really, fly the tricolor, right? So I really hope more and more people come out and fly the tricolor and take pride in the fact that we're India.
Also, I think one of the major enabling force for the successes we are seeing today is the launch of the entire Startup India program, right? With that, the government, really made it easy to get access to funding initiatives. There was a lot of relaxation on the startup taxation policies, and also public infrastructure was there for use. We have seen the whole partnership between ISRO and space tech companies.
It's a slow change, I mean, it's not there yet, right? But it's a positive change, and it's a move in the right direction, I mean, see, at least startups are part of the policy lexicon right now, which is a phenomenal thing. I still feel that there's a long way ahead in terms of easing regulation, making it easy for people to start and wind down businesses and to operate in regulated markets and industries. But it's a start, and it's a very, very important start, I would say.
Oh yeah, and if someone would need numbers to strengthen this belief, the initial 10,000 startups in India were recognized in 808 days, and the latest 10,000 startups were achieved in the last 156 days.
Wow.
Now that means every day there are more than 80 startups being registered, and this is, I think, the highest rate in the world. Okay, but moving on, somewhere not close to home, but SoftBank Group has reported a quarterly loss of more than $23 billion. And now Masayoshi Son is worried that the funding winter for startups may continue for longer. He said that when he was speaking to some of the unicorn founders, they are pretty unwilling to accept a lower valuations in the fresh funding rounds. And this is an assertion that has led him to believe that, quote unquote, the winter may be longer for unlisted companies. Quite a lot of companies have slashed their valuations, the most notable ones being Stripe, which is, the world's most valuable startup. They cut valuation by 28% in an internal assessment. But the vast majority of startups, and many of them who do not have enough runway, they are holding back on cutting down the valuations. Now, how would this work?
It's bound to happen. See, the VC game is a game of valuations, right? I mean, I come in at X valuation hoping that, it becomes 3X or 5X or whatever else X. And the moment there is a down round, then there's a spanner in the works, right? I mean, obviously. And similar for founders as well. You saw 2021 was like the bull run of bull runs, right? I mean, you had crazy valuations, 50x, 60x, 70x, and so on, right? And you're seeing reason and sanity return in terms of valuations, right? Yeah, Shopify has cut its valuation. Stripe has cut its valuation internally through an assessment, right? Not through any market event or whatever. And it's bound to happen, I guess it's just par for the course. SoftBank incidentally deployed less than 5% of their thing?
3%.
Something like 3% of
There's
their...
a very nice quote by Jason. I mean, Jason Lemkin posted this on Twitter. Like, SoftBank is investing at 3% of its space a year ago.
Yeah, pretty insane. I mean, they only invested about $600 million in the quarter, right? Whereas they were doing about $20+ billion just last year, a quarter. And with the Fed raising the interest rates and trying to curtail the amount of money in the market, right? I mean, obviously, you're not going to see the same amount of unbridled optimism as we saw in 2021. I love the SoftBank slides. If you go back and look at Masayoshi Son's slides, there are weird pictures of unicorns. And this time, I think he compared SoftBank to some ancient Japanese warrior and so on. Like, very, very interesting, nevertheless, I mean, and this is an annual event, right? I mean, it happens almost every year where something like this happens. But it's going to be an interesting time. I don't see that the valuations will keep rising like how they, were in 2021. So down rounds are going to happen. And from an investor perspective, hey, I mean, if you invested at 21 valuations, then 22 valuations should be like a discount for you, right? I mean, if you had that conviction then, you will have a lot more conviction now. So, yeah.
Yeah, I mean, as they say, right, when the market's on a downturn, is the best time to invest more. But many other high-profile investors have also started cautioning their portfolio companies, and they themselves are very selectively investing into startups. Sequoia, Lightspeed, and Y Combinator have also advised their portfolio founders to quote unquote plan for the worst. And just comparing back to last year, the same time, we saw this pre-Tiger Global was in. We were calling it the year of the tiger. But even Tiger Global has really cut down on their investment pace, and they're being more cautious about it.
Just a word for founders, right? I mean, see, the thing is that if you listen to VCs on when you have to spend and when you have to save, then there's just too many of these cycles that you can get embroiled in. So I think, founders, operators should keep their head even keeled, because they ultimately have to run the business, and you have to focus on sound economics and do what you have to do, right?
So people usually say when it's raining in Bangalore, it does take a bit longer to get cabs. But over the past few times that you have been going to office or just traveling anywhere in the city, how much time has it been taking for you to get a cab?
I can book a cab, go have my bath, perhaps shave and make coffee for myself, and then check my app where cab is 3 minutes away, I think. Yeah.
Wow. So last week I came across this article in Inc. 42 which very nicely outlined the various legal battles which Ola has been entangled with. Now we saw in 2020, in the peak of COVID, Ola started this Drive the Drivers Fund because COVID resulted in losses of many drivers. They're not able to make their ends meet. And even CEO Bhavish Aggarwal pledged his entire years of salary as part of this fund. But around the same time, drivers could lease cars from the company, and this was given for a specific amount of time. But because of the various cash transfers which the company was going through, the company took back the cars from the drivers even before the lease period ended, and they were auctioned it back to the OEMs. So what happened is drivers were left without a job, so to say. And because of that, drivers around the country, especially in Delhi, Hyderabad, Bangalore, Chennai, these guys have formed unions and have filed an FIR against Ola for breaching their contract. How do you think this is going to play out now?
Well, it's pretty sad, right? I mean, see, 2020, I think obviously a lot of drivers' incomes were hit. Significant portion of them just went back to their earlier livelihoods, right? Whether it was farming or doing something else in their villages. At least, anecdotally, we see that in Bangalore, right? I mean, there are a lot fewer cabs than earlier, and a significant part of those folks have not come back yet. They've kind of settled to that new lifestyle there, and it's hard, man. I mean, the incentives are pretty down right now. Earlier, while a driver could earn 60,000-70,000 a month, right, and net maybe 30 grand, let's say, with all the fuel costs and the EMIs and all of that stuff. Today it's down to 40 grand, right, 40-50 grand. So how much is there to really net as any income for the driver, post your fuel costs? I mean, with petrol being at 100 and your EMI of, let's say, 10 or 15 grand, it's very less. So a lot of these drivers who took up cars also just surrendered their cars, right? I mean, it's not viable for them. But this court case, it's also a lot to do with the promotions, right? I mean, Ola promoted this in a way that, okay, hey, anyone can own a car and you're going to be your own boss and all of that stuff.
Even on that, I think just before COVID, Ola ran a referral program where for every partner driver that was referred into the company, the referral person was getting 3,000 rupees for every new application.
Right. So I'm not really sure, I mean, again, the details are a little murky here. I mean, we don't know all the details, so really can't take sides on one thing or the other. But the drivers have been pushing for a need to unionize for a while, right? I mean, to have their grievances heard and so on. And I think they've just kind of taken it up through these forums with the courts and so on. So in any case, see, we made the point when some urban company personnel were protesting as well, that in a two-sided marketplace, you have to actually care about your demand side and your supply side almost equally, right? I mean, you can't have happy customers on one side and, really pissed off drivers or really pissed off technicians and beauticians, right? I mean, you have to sort of keep both sides of the marketplace happy. And that's a really hard task. I mean, really hard task. Something that, I think the platforms are still trying to figure out, I would say. Zomato, Swiggy, I think urban company have all tried to reach out and add a lot of value added services, including education, insurance, financial services and everything. It's symbolic of a larger problem, which is that, dealing with both the demand and the supply side of these platforms.
Yeah, I think the whole gig economy in the country needs to be more formalized, and many startups are also taking a lot of initiatives on that front. You mentioned about, what urban company is doing, and I think very recently Swiggy also announced an industry first moonlighting policy under which employees can take up external projects pro bono, or if they are in serious financial needs, Swiggy can give internal approvals for them to take up that work as well. But in the past few roundups, have also spoken about how the government needs to intervene here, because companies like Ola and Swiggy, they have the cash to take up good lawyers, but the driver partners, right? I mean, they might not be able to afford that. So don't you think the government really needs to step up and set up some regulatory body in the gig economy space?
I think plenty of that is already happening. I once did an episode with Mr. Ramesh Kailas, who's the India Tech CEO, on how these new jobs are sort of operating in between lines, right? In between regulation, gig economy, platform economy kind of jobs, right? But in the meantime, I mean, the drivers and the workers have also unionized, right? And look, philosophically, like I mentioned, you have to care about the demand and the supply side of things, right? You can't run a marketplace at any rate. You can't run it any well if it's hell bent on screwing one side of the marketplace and then, privileging the other. I really hope innovation will solve this rather than, regulation. But some amount of regulation in terms of guardrails and everything is definitely warranted. Yeah.
Okay, so it has been almost a year since PayU and BillDesk announced their mega merger deal, and CCI had the formality role to play in it, right? But ever since investigation started from there has absolutely been no movement for over a year. The deal was signed in August of 2021, in which PayU said that they would acquire BillDesk for $4.7 billion. Then in April of 2022, CCI had asked PayU to furnish more details before the deal can be cleared. Fast forward to August of 2022, even after fresh filings, nothing has moved. The reason for this is, as CCI is stating, is to look into the antitrust angle of this deal. BillDesk is a major bill processor in the country in some categories with more than 80% market share, and PayU is one of the largest domestic payment gateways in India. Also, a deal of this size, $4.7 billion all cash, has not happened in the Indian fintech scene, which could have made the CCI look even more closely. PayU itself has made a string of acquisitions trying to own the entire payments value chain. They acquired CitrusPay back in 2015, Wibmo in 2019, and more recently in 2020, they acquired Paysense. What was supposed to be just a formality check has caused one of the biggest fintech deals in the country not to stall, but rather made the process much more complicated.
Yeah.
How do you think
these large mergers and acquisitions are always complicated? There are many regulatory hurdles to cross, right? So I'm not really so surprised that Competition Council of India is kind of giving them a hard time. Obviously, they're set up to monitor this kind of consolidation and prevent any kind of monopolies in industries. I do feel that some of it in terms of regulation catching up is much required, right? But it's complex, and I hope that they're able to see it through, right? Because we did talk about it during that time. I think it was almost a year back, right? $4.7 billion, a mammoth deal. PayU has been around for about 10 years, 12 years maybe. BillDesk much longer, about 20 years, and both of them have poured in a ton of money, innovation, investments into the ecosystem to build out this whole payment ecosystem that we talk about, right? So yeah, I mean, this was good consolidation in that sense. Let's hope that things clear up sooner than later.
Also, in the last few years, we have seen the rapid digitization and significant usage of internet in the country. And as a result, there has been a substantial increase in investors also trading online, especially in the bond market. Presently, these platforms are not under any purview of any sectoral regulator, and due to this, there exists a lot of ambiguity over several aspects of their functioning. So as a result of that, SEBI had floated a consultation paper setting forth what are the regulatory guidelines that need to be followed in this space. These include the likes of who will be regulating these platforms as brokers, restrict bond platforms to only allow for listed bonds, allowing ticket size to be a minimum of 10 lakhs per bond. So imposing KYC and anti-money laundering rules, and introducing investor complaint resolution. And there are a bunch of more which we can put out a tweet around it. But what do you make of this? How will this help us in getting more investors into the fold and also ensure that they're not being cheated in any way?
See, when it comes to financial services, the regulators always err on the side of caution rather than on the side of innovation. That's always been the case because it's people's hard-earned money at stake. So what the SEBI has done effectively is to basically limit the amount of investments in these bonds to a very finite number of investors, right? I mean, they've specified a minimum limit of 10 lakhs, right? Now, I don't know too many people who would kind of put in that amount of cash, right? I mean, so they're only limiting it to a certain segment of the population, and also again listed, right? I mean, 90% or more of the bonds are obviously unlisted. It's trying to cut the market down in size. Again, we spoke about Rakesh Jhunjhunwala. He always talked about the financialization of Indian savings. It's still a long way off. I mean, the regulators will sort of do these things. It's always going to be one step forward, two steps back, or two steps forward, one step back. And things will have to work themselves out. I just feel bad for the fintech trading platforms, right? Because oftentimes we've just argued that entrepreneurs themselves don't like, running things in loophole. It's a lot of ambiguity, and the folks that we've spoken to at least, always say that, hey, why don't you just come up and clear the air in terms of what the regulation is and specify what we can do and cannot do. Hope that we can balance both innovation and precaution in this case. Sandeep Parekh has a very good thread on Twitter explaining the various nuances of this, right, in terms of bond trading platforms and stuff.
Also, earlier this year, we saw Navi also raise money through issuing of bonds, right? So, you're considering with this whole funding winter, raising money through issuing bonds could become a viable way for startups to raise money.
The alternate means of raising money is always welcome, but you just have to balance both sides of the equation. But some of these things are legacy also, right? It will take a lot of time for the mindsets to kind of shift and change.
And also on similar lines, the Reserve Bank of India has issued strict guidelines for digital lending in the country. As a result, borrowers are set to benefit hugely from this. They have issued the guidelines based on recommendations of a working group for digital lending, whose report was submitted back in November 2021. Now, these safeguards provided under the framework will ensure that the interests of borrowers are protected. Okay, some of the key points which borrowers should know about this new digital lending framework include: a borrower should not pay any fees other than additional charges to the lending service provider. Credit limit cannot be increased without the explicit consent of the borrower. To raise their grievances and complaints, borrowers can reach out to a nodal grievance redressal officers engaged by the regulated entities and the loan providers, and the complaint should be resolved within 30 days of time. If it is not resolved within 30 days, the borrower can directly reach out to the RBI. On data collection front, digital lending apps cannot collect user data without explicit consent of the borrowers, and a borrower will have the option to accept or deny consent for the user-specific data, including the option to revoke previously granted consent, besides an option to delete the data collected from borrowers by the lending apps. It's really good to see that there are provisions here to not only safeguard the borrower's interest on taking money from the companies rather than the financial protection. So not only does this framework protect the financial security of the borrowers, but also their data security as well. And considering as India is getting digitalized, these are very important guardrails to have in place.
So essentially, I think what these guidelines or regulations strive to do is basically bring the borrower and the lender, the actual lender, which is a regulated entity, a lot more closer here, right, and squeeze out some of the room that fintechs had in between, right? Again, like we mentioned with the previous case on bond trading platforms, the regulators always tend to privilege caution over, innovation, and that's what they've done in this framework as well.
Okay, so there were also a couple of well-known acquisitions that took place in the ecosystem last week. This was by Scriptbox and Oyo. Scriptbox had acquired investment startup Wealth Managers to grow their cumulative consumer base. And with this acquisition, Scriptbox will expand its geographical footprint and customer base. Wealth Managers is a wealth management startup that offers portfolio management and mutual fund distribution services, among others. And I think it was earlier this year in January that Scriptbox had raised $21 million as part of its Series D fundraise. So Oyo also announced the acquisition of Denmark-based holiday home operator Ben Homes Ferriers for an undisclosed amount. This company is a full-stack operator providing end-to-end solutions to homeowners, and they operate 737 holiday homes spread over 30 holiday parks on its platform. And till date, Oyo has clocked more than 2.5 lakh guest nights in just this year alone. Now, these are very important acquisitions considering, the entire hospitality industry is opening up post-COVID. And also on the Scriptbox investments, as we just spoke about, India is getting digitalized, more and more retail investors are coming on board. So I think these are really great acquisitions considering the entire timing of things.
Absolutely. I mean, see, look at the number of SIPs that have grown, right? I mean, especially over the last year or so, and you've seen how the markets have been holding as well. I mean, this is all because of domestic institutional investors and retail investors, right? I mean, that's what is holding the market as well. And you're going to see this kind of consolidation happen. The valuations are down, as we mentioned, right? And there's a lot of value for cheap right now. Well, relatively at least. Scriptbox acquiring Wealth Managers is interesting, right? I mean, it's a fintech business acquiring an old world distributor in that sense. Right, and I think you're going to see a lot more of that happen as well. Oyo, again, I think they're getting a lot more vertically integrated in a lot of these different categories, and this just adds to their margin basically. And you see that, tourist visas are opening up for many countries as well, right? Europe has opened up as well, and some of the other countries like, some that I would love to visit, for example, Japan, Korea, are taking time. Hopefully, by October, November, I mean, they open up as well. And there's a lot of pent up demand, man. I mean, people have been at homes for last 2.5 years. They really want to go out and explore things, live their lives. So yeah, I mean, it's pretty interesting.
Last year, I think Denmark had come up with this whole VR virtual reality tours also in the country, which allowed people to explore the islands by sitting at their home. So that was pretty interesting, I think.
So I
Check
caught
it out.
a interesting podcast of Mark Zuckerberg, right, with Lex Friedman, and it's a fantastic podcast. Really, I mean, if you think about it, Mark Zuckerberg, I mean, was a college dropout who incidentally, invariably, kind of built the most powerful platform in the world, right, Facebook, and he's been running it for what 18 years now, right, 2004 to 2022. I mean, the guy has scaled immensely. He was a college kid and he's scaled to become one of the most powerful people in the world. And it's pretty remarkable, and he talks about how this change to Meta is going to, reflect in the future, right? And why VR is the answer to bringing people closer together and so on. So definitely check out that podcast. We'll again link it in the description. Very, very fascinating stuff. Yeah.
Also, talking about fascinating, sites seem to be changing in the ecosystem in terms of the amount of venture capital being raised. Last week, we had a $210 million round for Ronnie Screwwala's edtech platform Upgrad. They had this fundraise from ETS Global, Bodhi Tree, Kaizen Management Advisors, and others. This, as it mentions, the fresh air to the edtech sector while we are seeing thousands of layoffs happening in the industry. CleverTap has also signed a definitive agreement to raise $105 million in a Series D funding round, which will be led by CDPQ, a global investment group who committed $75 million with participation from IIFL AMC's Tech Fund, along with existing investors Tiger Global and Sequoia India. Wealth management platform Deserve backed $21 million as part of a fresh funding round, which was led by Axel. So one thing to note here is Upgrad's own founding team has, invested $12.5 million in their funding round. And this is to maintain their over 50% ownership in the company. Now, we have seen companies chase large, amounts while diluting their shares. So, what do you make of this?
Yeah, it just shows a greater self-belief in the founding team, right, in the leadership team, that they've invested again in, in their own company. It's definitely pretty interesting. Warren Buffett has this quote that, be fearful when others are greedy and be greedy when others are fearful. You're seeing a lot of fear in the market right now, a lot of uncertainty, and Upgrad has decided to kind of double down, right? I mean, 200 mil is, again, a huge round. We said a lot of these growth rounds will slow down, and they have, right? I mean, you don't see a lot of these 50 plus sort of rounds happening anymore. And there's also a lot of value that can be bought for cheap at this point. So I also feel that, I mean, this money may also be repurposed to acquire a few of these startups and struggling edtech companies and so on. It's good. I mean, it's a fantastic time to consolidate, at this point of time. And CleverTap, again, one of those doyens of Indian SaaS, has been growing very steadily for a while now, right? I think they probably are in the 50 to 100 million range at this point of time. In the customer engagement market, we should definitely talk to, Anand, who's the founder, some point of time in the podcast. I mean, he's a stalwart of the industry. This will definitely help them in their expansion efforts, I suppose, overseas. Some pretty fantastic fundraising activity.
Yep. Last week, there was this article on TechCrunch which stated that Wiz, which is the startup operating in the cloud security space, scaled from $1 million to $100 million in ARR in just over 18 months, from February of 2021 to approximately July 2022, according to the company. But there have been companies like Shopify, Twilio, Slack that took anywhere between 4 to 8 years to reach this goal. And here we have a 2-year-old startup doing that in less than 18 months.
It's pretty phenomenal, man. And cloud security, again, is one of those things, right? Integral for the larger enterprises. 100 million is 800 crores, right? In 18 months is just simply ridiculous. So apparently, I mean, they raised a Series A of, 550 million at a $6 billion valuation. Betting on the fact that these are experienced operators, right? Truly phenomenal. 100 million in 18 months. I wonder what else is there to see in SaaS, right? I mean, we keep talking about SaaS exploding. It's getting really sassy everywhere.
So this week we'll be putting out an episode with Praval, who is the VP marketing at Zoho. So that'll be an interesting episode to listen to. To know when that episode is out, do not forget to subscribe to our social media platforms. On LinkedIn, we are the Startup Operator. And on Twitter, our handle is @OperatorStartup. Please do let us know how we are doing our episodes and how you're enjoying this roundup, as it helps us to get better. And if you think we are doing well, don't forget to hit the like button and share it with your operator friends. And something that can really help more folks discover our podcast is if you leave a review on your favorite podcast platform. So that's a wrap from our end. Happy Independence Day, and we'll see you again next week.
Happy Independence Day, folks. And don't forget to subscribe to our WhatsApp newsletter as well. Thanks.